we've seen pressure on goeasy shares today. goeasy, of course, is a non-bank lender to customers not served by the regular banks. Its interest rates, of course, are higher. The president and CEO, Jason Mullins, is going to step down at the end of the year in a move that has surprised at least some analysts. Let's get more from Stephanie Hughes of Bloomberg. Stephanie.
Hey, Andy. So, yeah, you're absolutely right. This took a few analysts off guard and probably some traders, too, since goeasy shares fell as much as 10.6% today. That was the biggest intraday decline since May 2021, and it put it firmly at the bottom of the TSX worst performers list. Like you mentioned, the financial services company, which offers consumer loans and leases furniture, they said that their president and CEO, Jason Mullins, would be transitioning from the role that he's held for about 6 years, but would remain in the company as a director on the board. Now, the company hasn't named a successor yet, but Mullins would be participating in the search for a new CEO. And this has drawn some interesting commentary from analysts as it was announced. So one of these analysts was RBC Capital Markets analyst Jeffrey Kwan, who before the opening bells today said that the announcement was unexpected and any material decline that we see in shares could present a buying opportunity for people eyeing the stock, since he said that the company has a good track record for solid organic growth, and he expects the company to continue having solid organic growth prospects. So because Mullins is going to be participating and he's going to be taking part or still remaining within the company as this transition happens, he expects that transition to occur smoothly. Now, allow me to smoothly transition to the other stock that I've been watching today. That is Air Canada. Those shares have been slipping about 1.8%, most in nearly a week. And it seems like a continuation of industry pressures facing the Canadian airline. So that actually led in our data, in S3 Partners data and our reporting, in a short seller interest as a percentage of equity float went up to nearly 19% in early July. So to put that into perspective, that means that investors are expecting some more pressure on this stock here, and that 19% short interest of equity float rate is more than double the 7.4% that we saw last year, and it's the highest level since December 2021 when we saw travel restrictions take place, and that brought that level to 21%. TD analyst said that Canadian investors are expecting a slowdown in the Canadian economy, which could weigh on travel demand. And also, we've been seeing domestic airline competition from competitors like WestJet and Porter, the latter of which has been expanding its flight map in recent years. So there's a lot of factors working against Air Canada, so that means that has led the airline to struggle to return to pre-pandemic levels. Those shares are down 60%, over 60% since January 2020. Andy?
Thanks very much, Stephanie. And actually, we talked to the president of Porter yesterday on the close. Stephanie Hughes of Bloomberg.